Everybody, this is a crypto update here. We'll start with the Bitcoin. So we saw this important, very important historic news, right? That the Bitcoin spot ETFs were approved, and we have 11 different ETFs in the US now. So this came out on that day, and well, it's basically sell the news and buy the rumors. While the rumors is over, which was one of the reasons why Bitcoin performed that well. It went from 30,000 to well above 40,000. So we can actually see that there was no follow through in buying. Well, we actually see a sell-off, and that's what I expected here, right? With my last update. So what we're seeing is a sell-off, right? Well, overall, we have to look one time frame higher to actually see that. Here we see a multi-bar pattern. Well, these are great patterns as a follow-through, right? As a new base for new highs coming in. What we see here is a sell-off bar. Well, that's not big enough, right? I'm actually expecting after this pullback now, it seems like it's over this sell-off, but we should see another series, like another one other wave of sell-off, while selling off into the 21 moving average here on the weekly chart. And then once we find support here and we break the green line, well, that's basically the entry signal. So it looks very good. Also, we have already come down right from 49,000 to 38. Well, that's about a 25% drop in value. Well, that's not a lot, right? In a strong uptrend where we get typical pullbacks of 30 to 40%. So that's still a shallow pullback, and we can expect more to come. But it's still very bullish. That's a great multi-bar pattern. I wanna scale in basically. Now Ethereum had back here there was an S2 pattern, futures pattern on the 4-hour chart. So it had made a nice stop run move, right? What we expected. It has actually achieved its target area, which is the measured move. And now we're pulling back, coming back to the support area, the midline of the multi-bar pattern as well. That's very normal, right? Now we're sitting here at an important level, and we're basically just testing this breakout level of the S1 pattern on a weekly chart. So it's kind of everything is normal, right? Now let's have a look at some interesting charts. So I found that. Well, let's start with this one. On the 11th of January, the news of the ETF approvals came out. These are the ETFs. We have Grayscale, etc. This is the fees. So what sells best is actually the BlackRock, and I would probably think the Franklin, because the fees are really low. Well, we can see that here, right? The flows out of a product and into of a product. We can actually see that, well, we have outflows of the Grayscale, which was not really an ETF, right? But it was holding Bitcoin. So there's an outflow out of the Grayscale and into the ETFs, and we can already see which ETFs are popular. Well, it's the Fidelity, right, the green one, and it's the black one, and the BlackRock, right? So BlackRock and Fidelity so far. So we see a shift, right, from the Grayscale into the ETFs. And this is not yet a new buying, that's just shifting, right? So with the approval of the ETFs, well, slowly and steadily, we should actually see institutional buyers, but as well retail buyers who do not want to open a crypto broker. They can buy the ETF with a normal stock account, right? So let's have a look at the left picture. That's a really nice overview. That's the total of Bitcoins that can be mined. That's the 21 million, right? And we can see these are unmined, so the majority of the Bitcoins of the 21 million are already mined. And who holds them? Well, Satoshi, these are the early blocks. Satoshi holds 1 million of those 21, and they are not moving, so it's in his wallet for over 10 years. And with the big majority, more than half is individuals own Bitcoin. And we've got a couple of companies, right? We've got a couple of funds, governments, and DeFi, decentralized finance, and this is unmined. Now with these ETFs, well, this part, right, of the puzzle, well, that should increase over time. Well as Bitcoin gets more and more popular, mainstream, companies will buy more, governments will buy more, Once the retail sector gets more and more interested in Bitcoin, well, we see more and more DeFi, right? This should grow. Well, what as well should grow is the loss, right? So that's the interesting part. These are Bitcoins that were mined and they're just lost because people lost their key, their password, whatever. So this is a big chunk of lost. This is not moving, right? So this is getting smaller and smaller. This is getting bigger, right? Well, this too, this is a retail sector held by individuals. So you can actually see, I mean, what potential there is, right? There's not much more to come. The mining capacity goes down, is cut in half every 4 years. That's what we call the halving. And the next halving event is in April this year, where only about 3 Bitcoins will be mined per block. That's about every 10 minutes. So we're basically like the rate of mining, the acceleration speed of mining goes down more and more, and these go up more and more, and this is limited, right? 21 million. This big square is not going to grow. The question is who gets which Bitcoin, and if supply is limited and demand goes up, especially if it's several important and powerful stakeholders, well, then the price goes up, right? So we can nicely see retail as a majority holdings in Bitcoin, and the institutions are just coming up to come into the play, and will certainly push price over time. Now let's have a look at the next one. This is the halving event, right? The next one is in 24 April. It will drop from 6 Bitcoins mined per block every 10 minutes to 3. Then it goes down, down, down. So it really is marginal what comes up next, right? So this nicely shows how the majority of Bitcoins was mined within the first 10 years, right? Where we are right now. Now here you can see the returns, the annual returns. I mean, it's a tremendous asset class, or coin, right? Bitcoin and the other ones. And we only had 3 losing years, right? Spread apart within 4 or 5 years. And we have just started the last year really nicely, and we should actually see a few consecutive positive years. Well, it's up for you to make your due diligence, but it looks really, really good, and this is a really strong case here for cryptocurrencies.